안녕하세요. 자본시장연구원 김민기입니다. 이번 KCMI 글로벌 이슈에서는 ETF의 부상과 미래, 자본시장과 금융산업에 미치는 영향을 주제로 인터뷰를 진행하겠습니다. 먼저 오늘 주제에 대해 말씀해 주실 이짝 벤 데이비드 교수님을 소개해 드리겠습니다. 벤 데이비드 교수님은 오하이오 주립대 경영학과 교수시며 현재 오하이오 주립대 부동산센터 학술 디렉터로 활동하고 계십니다. 벤 데이비드 교수님은 투자자, 가계, 기관 등 시장 참여자의 다양한 행태와 이들의 행태가 자본시장에 미치는 영향에 관해 주로 연구해 오셨으며 최근에는 ETF에 대한 연구를 활발히 진행하고 계십니다. 자본시장의 전문가이신 벤 데이비드 교수님과 이렇게 이야기를 나눌 수 있게 된 것을 정말 기쁘게 생각합니다. 그럼 ETF의 부상과 미래, 자본시장과 금융산업에 미치는 영향에 관한 인터뷰를 시작하겠습니다. 첫 번째 질문입니다. 2000년대 이후 ETF를 중심으로 한 패시브 펀드의 성장세가 지속되고 있습니다. 이러한 성장의 요인은 무엇이며 경제 전반에 어떠한 기여를 했다고 평가하시는지 말씀 부탁드립니다.
So thank you very much. I'm going to start with just telling maybe just about the ETF world in general. So the ETFs have been around since the mid-90s. The first ETF came to existence in 1993. This is the SPDR, SPY, that tracks the S&P 500. Now, in the very early days, ETFs were used by institutional investors and actually were not intended to be used by retail traders. This was the original intention. So ETFs are very similar to closed-end funds. So they have this advantage of continuous trading during the trading day. But occasionally, when there is mispricing bigger than a small amount, there is some intervention either by the ETF itself or by other parties, arbitrageurs, basically closing this gap. And this is done by either creating or redeeming new shares as the day goes. So in a way, this kind of allows the ETFs to benefit from both worlds. They are both liquid and have continuous trading, but at the same time, the price deviation from the fundamentals is kept to a minimum. Now, ETFs, as I mentioned, were first introduced in the 1990s, 1993, and since then they were in just meteoric rise. So what you see here are the number of ETFs around the world, and you can see in 2021 it's over 8,500. Now, if you look at the assets under management, it's even more astonishing, reaching $10 trillion in 2021. Now, these numbers are even more striking when you compare them to the growth of mutual funds. This paper looks at mutual funds in the US. And as you can see around these times, around the 90s, mutual funds had a very high, a very sharp increase in volume, in number of funds. But since the early 2000s, it has been stalled and even declined. And at the same time, as we saw before, the ETF market basically boomed. Let's have a look at the ownership of US stocks by mutual funds, and you see the same picture. During the 90s, there is a high increase, from low single digit in early 90s to 20% or so in 2000, and then it kind of flattens out, or the ownership is not rising as fast as before. So what made these passive instruments so attractive? So one is the accessibility. So you could hear about ETFs through social media, through the financial media. They oftentimes have catchy names. So if you're thinking about restaurants, it might be Byte. If you're thinking about gender equality, it might be she. So they find tickers that are very accessible. Also, the execution itself, being able to trade yourself through online discount brokers, the major exchanges lowered their transaction costs. It's much easier in the last 2 decades. Now, all this came together with a push that I would say is kind of on the philosophical or narrative side. So, you know, as our profession, finance, kind of matured, there have been more and more evidence that the average mutual fund does not beat the market, which means that probably the best strategy for retail investors or for households is just buy and hold. Now, then you might say, well, you know, if I do buy and hold, why should I pay high fees to mutual funds or to investment advisors? I would just manage my own portfolio. So this is called the democratization of investments, or sometimes it's called the passive revolution. Basically, you know, in all the tools that are available for professional managers are now available to investors. There is also another interesting question of the effects of this of the ETFs to the economy at large. So you could think about several advantages. The first one is improved risk sharing among investors. Once we have more instruments to be traded, we could, as an economy, we could share risks more effectively and more efficiently. In addition, there is an improved liquidity. If you need your money fast, you could liquidate your positions at relatively low cost and high speed. As I mentioned earlier, there is lower information and search costs, meaning that you could, if you decide, for example, in this little example, if you're looking for firms that trade with China, I guarantee that you will find more than one ETF that invests in these stocks. And finally, by having ETFs as an easy and accessible layer to investors, you get both an easier buy and hold strategy by households and retail investors. And it also lowers the bar of entry for investors. So also investors that normally we would consider uninformed investors could invest in you know, for example, the restaurant business by investing in Byte without understanding even the dynamics in the industry, without being able to assess the prospects and the quality of the management teams of the different firms.
답변 감사드립니다. 다음 질문입니다. ETF와 같은 패시브 펀드의 증가는 다른 한편으로는 시장 내 가격 발견 기능을 수행하는 액티브 펀드의 위축을 불러올 수 있고, 더 나아가 결과적으로 시장 효율성 전반에 악영향을 미칠 수도 있다는 주장이 제기되고 있습니다. 이처럼 ETF 시장의 가파른 성장과 패시브 투자로의 전환이 시장 효율성 전반에 어떻게 영향을 미칠 것으로 평가하시는지 말씀 부탁드립니다.
So you could think about it as two non-mutually exclusive effects, meaning that both of them could arise at the same time. So on one hand, you have more trading at aggregate levels. So for example, at the industry or the group of stocks, because these ETFs hold portfolios at the end of the day. And if you trade Byte, the restaurant ETF, you trade effectively, you trade a portfolio of stocks, not an individual stocks. So there could be a better aggregation of information at the topic, the industry, the market, or perhaps at a whole. But then at the same time, there is less informed trading at the security level, because for news are going to be impounded at the aggregate level, and investors may put less attention to individual securities. Now, it's really important to understand that the question of market efficiency is a question of which type of efficiency. For example, in what we described above, there could be better filtration of macro news. So if the Fed increases interest rates, for example, decreases interest rates, it's going to be potentially more efficiently impounded in prices. But maybe firm-specific news are not going to get the same attention as before. Now, this is obviously an empirical question, and there are a few papers that have tried to get it at this point. I'll tell you a bit about some. So in general, I would say that it's difficult to just, as a financial economist, it's difficult to link demand to price pressure to stock valuation. To do all this link in a causal way, to say one causes the other, it's just challenging. I'll show you a couple of examples, but it is not easy to do. As for correlations, there is evidence that there is increased serial correlation in stock markets that introduced index funds like ETFs or just mutual funds that track indices. So they increase the serial correlation. In a moment, we'll see one potential reason for this. So in general, this is unrelated to ETFs, but happens also in ETFs. Investors tend to chase past returns. So investors invest primarily or more heavily in securities that performed well in the past. And you could see here a chart of past performance in the past month and the flows in the following month. And it's for two types of ETFs that I will just discuss in a few moments. But you could see for both types of ETFs, it is increasing. The better the ETF performed, the more flows, more money, capital is hitting this ETF. Now, this kind of behavior may push prices in the next period even further, right? So you performed well, or stock performed well this period, this month, more flows coming in from investors because they chase past performance and performance was good. And this capital basically pushes the ETF to purchase more of this, more of the same stock, basically pushing prices even further. Now, in ETFs, it's actually difficult for empirical reasons to show this. I wanted to share some evidence we have from mutual funds that actually demonstrate exactly the same point. So mutual funds, as you may know, are ranked by Morningstar. Now, Morningstar had a large change in its methodology in June 2002. And as you can see here on the left, the ratings became much more homogeneous across styles. Styles are basically a group of stocks like large value, large growth, etc. Now, investors tend to chase performance in the mutual fund space through Morningstar rating. It means that there are, for funds that are ranked at 4 or 5 stars, usually there are very high flows, as you could see from the right. Now, the change in Morningstar rating methodology basically led to spreading out all the flows across all different styles. Before, as you can see on the left here, there were only a few styles that had very high fund rating. So you could see just before 2002, the vertical line, only 3 funds had 3 types of funds, 3 styles had ratings of an average of 3.5. So these were the ones that actually got a lot of flows. Now, Morningstar changed their methodology for other reasons. And basically now, at this point, in every type of style, there are the same number of, or same fraction of 5-star firms. So flows are basically going to be distributed evenly, almost evenly across styles. Now, what we could do is actually go and see what happens in the underlying assets. So now we're kind of, moving from the fund and looking at the specific stocks and putting them in style buckets. And what we see is that before 2002, once there, when we look at the flows coming to the best performing styles minus the worst performing styles, we're going to see this increasing kind of momentum momentum flows. This is basically telling us that investors are chasing past performance. You can see on the right the returns, what happened to prices of these assets, right? Now, this doesn't appear after 2002 because flows were not as concentrated, right? I mean, before 2002, flows were really kind of concentrated on very few styles. So the effects are just not there. But just seeing this kind of momentum basically tells you that the demand of investors, even if it's just chasing past performance, can actually move prices by quite a bit, by a big amount. You see here, it peaks by on the right by about 10% after a year and a half.
답변 감사드립니다. 다음 질문입니다. 상장되어 거래되는 ETF의 자산 규모가 커짐에 따라 ETF에 대한 단기 수급이 기초자산의 가격에도 불필요한 변동성을 초래할 수 있다는 점이 지적되고 있습니다. ETF가 기초자산의 변동성에 어떻게 그리고 얼마나 영향을 줄 수 있는지 말씀 부탁드립니다.
Yeah, it's a very good question. So the ETFs have, as I mentioned at the very beginning, have this advantage of being able to regulate prices throughout the day. So we start with panel A, where the ETF and the net asset value, the underlying stocks, this NAV, what we call NAV, are basically at par. So, for example, the ETF that represents the S&P 500 is going to have the same value as the S&P 500. It is, let's say, at the beginning of the day. Now, suppose that there is some non-fundamental demand for this ETF. Maybe there is a pension fund that wants to buy this particular ETF. Maybe it's retail investors because they heard something. But so they want to buy the ETF, but there is no difference in the fundamental value of the stocks included in the S&P. Okay, so it's just a demand for the ETF. Now, what will happen is that through arbitrage, ETF and the stocks, the ETF and the stocks included in the portfolio are going to move towards one another. So there are going to be market forces selling the ETF in this case and buying the underlying securities just to close this arbitrage. Because, if you look at panel B, there is an arbitrage. The ETF is more expensive than the underlying portfolio. Now, so for some period, the ETF and the NAV are both going to be relatively elevated relative to the fundamental value, right? Meaning being overpriced. Now, in the long run, after a month or so, or a few weeks, arbitrage will kind of pull them towards the fundamental value. But in a very short time that we show in our paper, takes a few weeks actually, both are going to be impacted by this non-fundamental shock to demand. So this initial shock in panel B pushed the ETF upwards, and the ETF basically pulled with it the underlying stocks. Again, not because of fundamental reasons, it's just because of this demand. Now, there is the issue of how to actually identify this. How do we actually see that this happened? So in this particular paper, we looked at stocks moving from between the Russell 1000 and the Russell 2000. So in the US market, the Russell 1000 is an index that holds the largest 1000 stocks. The Russell 2000 holds stocks 1,000 to 3,000, so the next 2,000 stocks. Now, every year, both indices are being recalibrated. So some stocks move from one side to the other. Maybe a stock declined a lot in value, so it moves from the 1,000 to the 2,000. Or another stock, maybe stock 1,050 just had a great year and moved and became stock 900. So it moves to the other index. Now, what happens in these indices is that ETFs and other index products follow these indices, but they're much more likely to hold the largest holdings in this index. So the Russell 2000 ETF, for example, is going to hold much more of the stock number 1001 than stock number 3000. Now, when we look at this chart here, what we see is all the range from stock number 500 to 1500. So the ones on the left, or these dots on the left, are those that are the smallest ones in the Russell 1000. To the right, between 1000 and 1500, we see the stocks that are the largest stocks in the Russell 2000. Those are the stocks that ETFs have higher ownership. Now, what we do in this paper, we actually look at stocks that move from one side to the other and see what happens to their volatility. Now, we know that a stock, I mean, this is what we see here, that a stock that is on the left side of the 1000 cutoff is going to have lower ETF ownership. The ones that are on the right, which are the largest in the Russell 2000 index, are going to have higher ETF ownership. So over 1 month, basically, the ETF ownership could increase by a lot once a stock moves from one side to the other. And what we find in this paper is that with higher ETF ownership, there is higher stock volatility. And we could say that it's causal because we could actually measure the switch between one side to the other. So just to give an idea about how big the effect is, so a 2 percentage points increase in ETF ownership basically results in an increase from, for the median stock from 58 to 64. So it's quite a jump in the volatility percentiles. Now, in general, demand is mean reverting. Okay, so when there are large inflows, we're going to see a high initial price increase, as I showed you in the charts. There is a lift in the prices, but later in days or weeks, the price is going to decline. And the reverse happens in large outflows. There is an initial price decrease and later a price increase.
답변 감사드립니다. 마지막 질문입니다. 전 세계 거래소에는 정말 수많은 ETF가 상장되어 있습니다. 또한 운용상한 ETF 출시 경쟁도 점차 심화되고 있는데요. 왜 이러한 현상이 발생하고 있고 과연 이러한 현상이 투자자에게 더 나은 투자 수단을 제공하는지 의견 부탁드립니다.
So here's the question. It's a very interesting question, right? Both from an industrial organization of the stock market, our understanding as financial economists of investor needs. Anyway, so if investors held or pursued passive buy and hold strategies, you don't need many types of ETFs, right? I mean, maybe we need 12, 15 different types. Maybe you want bond, stocks, ETFs that hold bonds, hold stocks. Maybe there are like, growth, value. But now in the US, there are over 3,000 ETFs. Worldwide, there are over 8,500. You kind of wonder why there are so many types. Why? What's the purpose of this? Now, what we notice is that there are two types, broadly speaking, there are two types of ETFs. This is kind of generalizing, but I think it kind of cuts quite nicely through the spectrum. So there are the broad-based ETFs. These are the ETFs that most people know. These are like those that track the main indices, the S&P 500, the Russell, the FTSE. I mean, all these and all these large indices. They include many stocks. They are well diversified, right? I mean, if you buy the Spider, you're basically buying 500 stocks, and they offer their services at very low cost. Now, there are it's a spectrum, but you could at some point you could say, okay, these are kind of different. These are specialized ETFs. So these are ETFs that are going to invest in narrower definitions or definitions of portfolios. So, for example, a cybersecurity or drones, or maybe climate change, or maybe at some point there were firms that supported Trump. Now, these are smaller portfolios, much more niche, and they are offered at a higher cost. And again, the question is why? Why this is needed? I mean, it's not needed for someone who is pursuing a buy and hold strategy. For someone who buys, who pursues a buy and hold, only broad-based are needed. So why do we have this specialized? Now, before our conversation, I actually I was just curious to see what type of ETFs have been recently launched in the US. And here's what I found. So we have a virtual reality ETF. We have an ETF related to emergent food and blockchain. We have another one about climate Paris-aligned ETFs. We have electric vehicles, commodities, emerging market equity, green buildings. What else do we have here? Carbon offset, Bitcoin futures, inflation managed bond mutual fund, right? I mean, you've got all these kind of super specific ETFs. And again, you wonder why, why do they come now? Why didn't they come to the market, 5 years ago, for example? Here is our attempt to explain this. So ETFs are not much different than coffee, than yogurt, than other products. And investors, like customers, tend to have limited attention. So we tend to kind of go for the short description of anything, whether it's a yogurt or a type of an airline, or in this case, ETFs. And in this kind of market, when investors or customers have very little attention, a likely equilibrium is that firms, in this case, ETF issuers, the firms that, the BlackRocks of the world, basically compete on two dimensions. One dimension is price. Basically, just trying to provide the same thing, like standard quality at lower and lower cost. The second dimension is quality. Now, when we say quality, is really the substance of the product. If we think about airlines, these would be low-cost airlines. I mean, both of them take you from place A to place B. The low cost will basically compete on the price. We'll try to do it at, at the minimum price. Luxury carriers, they're going to be an experience attached to this. It's going to be some sort of and for experience, there is no limit to the price. Obviously, you need to value this experience. So, how does this relate to ETFs? The quality is going to be basically the expectation of making money, right? Of high returns. So, what do we see here? Over time, different types of ETFs have been introduced. So the first one that you see at the bottom are basically broad-based, broad-indexed ETFs. These are, the S&P, the Russell, the NASDAQ, all these kind of large portfolios. And as you can see over time, the fees, this is basically the y-axis, are compressing per year, and now they are going towards 5. So this is a big fee compression. Now, to be able to manage a large portfolio with such high fees, you need very large portfolios. You need economies of scale. Now, as a new entrant, suppose you wanted to start an ETF business, what would you do? Well, you can't really compete with a 200 or $300 billion portfolio. It's just impossible. So you just say, hey, how about I'm going to offer something different. So a new breed of ETF is being introduced. So for example, around the year 2000. So these are the smart beta that basically follow some strategy, some investment strategy. It could be momentum, it could be dividends, it could be a high yield, income growth, all this. And you've got a sector. So instead of looking at a broad index, you start focusing on smaller indices. Maybe it's energy, maybe it's utilities, maybe it's telecom. So these are the industry. And now when you offer something that is differentiated, that is different, you see these are the colors, that it's kind of more red, meaning it's different than things that existed. You could charge high fees. It's different, right? Now, at a later point, in the mid-2000s, there are thematic ETFs being introduced. And as you can see here, charge really high fees. So these thematic ETFs are basically saying, hey, we could invest in cybersecurity. Cybersecurity could be both hardware, it could be software, it could be maybe some other technology that is maybe it's a cryptology. It cuts across different industries. Think about climate change or sustainable energy. It could be about electricity. It could be about generating power. It could be about transmission. It could be about mining. It could be about so many things. And a single ETF could hold stocks in all these. But in order to participate in this luxury of investing in these ETFs, you would need to pay a higher price. So the next obvious question is to ask, okay, should I do that as an investor? Should I invest in these niche specific ETFs? Should I go after the drones and cybersecurity and restaurants, or should I invest in the S&P 500? And this is the next thing that we do. So the news is not very good. So what you see here are basically cumulative alphas from a 4-factor model over 60 months. So these are 5 years. And you have 2 types. The broad-based are basically the ones that I showed you before, the broad index plus the smart beta. These are both the ETFs that hold very large portfolios, look very much like the market portfolio or a variation of a market portfolio. And then there are the specialized. Specialized are basically the industry and the thematic ETFs, which are smaller in size, but charge higher fees. And what you can see here is that the broad-based over a space of 5 years declined by about 4% or so. And partially it's because of fees, partially it's because they just happen to. The specialized lose over 30% of their value over the first 5 years. These are alphas, I should say. So they have a negative alpha of negative 30%. You might wonder why is that? Why if maybe ETFs increase market efficiency, so why would they underperform? And this is a good question. And here's what we see. It's because there is a lot of demand for these types of stocks. Think about the thematic, the cybersecurity, the inflation. Everybody talks about inflation now. So there is demand for inflation. But by the time that the ETF issuer actually puts these ETFs in the market, it's already too late. The party is over. The underlying stocks are already too overvalued in a way. Let me show you some evidence of this overvaluation. So what you see here in panel A are basically market to book ratios. Market to book is many in the audience probably know could be both a measure of overvaluation, but also about a future prospect, right? A firm that is a growth firm, think about a Tesla, for example, or an Apple, will have relatively high market to book, right? I mean, there is an expectation of high performance in the future. Now, the stocks that are included in the specialized ETFs have higher market to book prior to the launch. And they kind of slide, as you could see, as after the launch. Again, it's finding the specialized ETFs basically go after the hot and overvalued industries and themes that investors are interested in. It's not that the issuers are bad. Basically, this is what investors want. So they cater to these investors. You could look at panel B. This is a measure of media sentiment. What is media sentiment? It's basically the way that the underlying stocks were portrayed in the media, and we just accumulate them, to get them to the ETF level. And as you could see, for those that are specialized, the media sentiment was very high before the launch, and it kind of declines and regresses to the mean afterwards. You could see that in the broad-based ETFs, it's just flat. There is nothing special about them because it's just the broad market, right? So this shows that there is a lot of excitement in the market about the themes and industries that the ETFs are going to be launched in the future. Let me show you a couple more evidence about this idea that it's overvaluation and optimism on behalf of investors. So what you see here are basically the long-term earning growth forecasts on the left. So basically you see that for stocks included in specialized ETF portfolios, the long-term earnings growth by analysts are very high just before the launch. After the launch, it kind of declines, right? It's kind of reality hits in a way. And this is what you see in panel B. The forecast error actually is much more negative for specialized, meaning these analysts are disappointed from seeing the actual performance of those firms. And finally, let me show you some statistics about the investor base. The sophisticated investors, usually considered the institutional investors, are more likely to invest in broad-based ETFs. Specialized ETFs are less likely to be held by institutional investors and are more likely to be held by Robinhood users, for example. Again, showing that the demand for this type of instruments comes more from the unprofessional retail part, which kind of squares together with the underperformance after the launch and the excitement before.
답변 감사드립니다. 지금까지 벤 데이비드 교수님과 함께 ETF 시장의 성장이 자본시장과 금융산업에 미치는 영향을 중심으로 다양한 주제에 대해 이야기를 나누어 보았습니다. 깊은 통찰과 분석을 바탕으로 좋은 말씀 나눠주신 벤 데이비드 교수님께 감사드립니다. 우리나라 시장에서도 ETF는 공모펀드 중에서 가장 괄목할 만한 성장을 이루었으며 향후 ETF 시장의 성장은 지속될 것으로 전망됩니다. 아무쪼록 근본 KCMI 글로벌 이슈가 ETF 시장의 성장과 변화, 그리고 잠재적인 영향에 대해 이해하는 데 큰 도움이 되길 바랍니다. 지금까지 인터뷰를 시청해 주셔서 감사합니다.